Hey, I'm Chris Ralph, the professional prospector, coming at you again to talk a little bit about gold. Now, gold went up almost 20% last year. Did you guys get 20% on your investments? You know, if you put your money in the bank, you're likely to get less than 1%. So 20% sounds pretty good. Now, I will say that there's a lot of reasons why gold went up 20% in 2019, but I think there's even more reasons why gold's going to be going up, probably even more in 2020. Most investors are completely ignoring gold. They don't want to touch it with a 10-foot pole. But central banks and high dollar, high net worth investors are buying it up hand over fist. Countries are buying it because they don't know if they can trust some other country. And if they have gold, they can get what they want. So if central banks are buying gold and rich people are buying gold, shouldn't you be buying some gold? I mean, nobody's really interested in it, the average investor. I did a video on gold when gold rocketed up last summer. And hey, it was one of the least watched videos that I did last year. Not that many people were interested in gold. And that's how it works. When no one's interested, it starts going up. And still no one's interested. And eventually, everybody's interested when it's gone up huge amounts. But you need to buy when it's low so that you can make the profits when it's high. So I'm going to talk about why gold is going to be going up in the next year or two. And stay with me and listen in, because this is stuff you need to know. Gold's big rally in 2019 showed that even the slightest hint of a recession is going to kick gold to the moon. And that's what I think is going to happen. Now, I've got to tell you, if you're listening in here, one thing I do want to warn you is I am not an investment advisor, and this is not investment advice. This is my personal opinion. Now, I've been involved with gold for decades and have been around to watch it. I'm an old guy and I've seen it go up and down. These are my opinions. They're not investment advice. If you need investment advice, find somebody who can give that to you, because this ain't it. Now, I said last year, gold started rocketing upward when there was the hint that there was a chance that the U.S. might go into recession. Well, it didn't happen, and we're doing pretty good. But just the thought of it sent people into a scurry to buy gold. And that's what's going to happen. I don't know that this economy is going to go down anytime real soon, but no expansion lasts forever, and eventually there's going to be a recession. And investors have already, the high dollar investors, the savvy and sophisticated investors have already tipped their hand and shown that when they think a recession is maybe going to be coming, they're buying gold. And, you know, it's starting to come that way. I mean, the growth in the world economy has gone up and up and up, and it's kind of flattened and started to head down on the other side. Experts saw that growth didn't, do real well in 2019, and they're thinking that it ain't going to be that much better in 2020. Still don't think it'll be a recession, but there's questions. And so what's happening around the world is central banks are pushing their interest rates down, down, down. Even the U.S. Fed has started to push interest rates down. Now, they're not pushing them down, with their foot to the floor and accelerating into down as fast as they can. They're still on the, like I say, it's the up and just starting to tip over kind of phase. We're in the just starting to change into the zone where we start reducing rates. But in Europe and in some other places, man, they have their foot to the floor, lowering rates almost as fast and as much as they can. There's literally trillions of dollars in government bonds that are now bonds that pay less than zero. That's it. You heard me right. If you put money in and buy that bond, at the end of a couple of decades of time, they'll pay you back less than what you invested, a negative interest rate. And that kind of low rates and negative interest rates, recession talk, and that sort of thing is what accelerates gold. And although gold broke out to a higher than it's been in like 6 years, the gold rally really has only just barely started. It's just gotten its feet off the ground. There's an excellent chance that gold will come up close to its all-time high in US dollars next year sometime. That would be a 25% increase from where we're at right now. The truth is, in a lot of nations, in Japan, Europe, and elsewhere, where they're already lowering interest rates lower and lower, trying to get their economy to do something, in those places, gold already is at a new high. Okay? In I think it's in Australian dollars too, it's already at a new high. And so it's only just because the US dollar has been so strong that we don't have a new high in gold in US dollars. But I think that's coming. Another important thing is that the mining industry has been underinvesting for decades. They just haven't put the money in. They're mining gold out faster than they're finding it. And not just, 1 year they mined more gold than they found. They've been doing that for years and years, for a decade and more. It's been the mid 1990s, like 25 years ago, before we were really finding gold at a good clip. Now we make occasional finds. It's more than zero, but they're mining it way faster than they're finding it. And you got to see that that's eventually going to be a problem. That if you're taking it out of the ground faster than you're finding it, eventually that's going to catch up with you. And you're going to start to say, hey, I can't get as much out of the ground because I haven't found any more to replace the stuff that I mined last year and the year before and 5 years ago and 10 years ago. People aren't putting the money into it. Independent investors aren't interested in exploration for gold because, well, it's a high risk type of thing. It's a lot of money to find gold. I mean, a lot of little exploration companies go out there and they drill and spend lots of money. Most of them don't find anything. Or at least if they do find something, they find something that's really not economic. So what do you do when there's just not enough to replace the stuff you're mining? Well, eventually the price has to go up. That's what happened in the 1970s. I mean, we had underexplored for decades and decades, and finally there was just way more demand than there was supply. And beginning in the late 70s, the price of gold rocketed upward and hit eventually $800 an ounce in 1980, which is a lot of money in 1980 dollars. Well, that spurred all kinds of interest and excitement, and individual prospectors like me went out to find gold, and big mining companies went drilling, and there was exploration everywhere, and lots of gold was found. But it took that giant price spike to get people interested. And that's what it's going to take this time, is gold running up to 3, 4, 5 grand an ounce before there's going to be people that are actually excited about going out and drilling and finding new deposits. So get on the bus now. Now's the time at $1,500 an ounce when nobody's interested. When I make a video about the price of gold as it's rocketing upward in the summer of 2019, and nobody cares. Nobody wants to watch it. Nobody gives a hoot. Well, things are changing, or at least they're going to change.
The whole point of getting involved in investing in something is to buy low and get a good price on it and hold it until the price appreciates. And it's just a fact, whether you're talking about stock markets or other kinds of markets, that if you are buying when everybody loves that thing and thinks it's great and it's been going up for a long time, and they're predicting that it's just going to keep going up and up and up, that's really the time that you should be thinking about selling whatever that is. When no one cares about a thing, when everybody's disinterested, when everybody thinks it's a horrible investment and it's started to go up even though they think it's a terrible investment, that's the time when you should be buying whatever that is. And it holds perfectly true for gold, but it actually holds true for stocks and a lot of other things. Real estate even. When nobody's interested in real estate, hey, maybe that's a good time to buy. And when everybody thinks real estate is the greatest thing ever and that everybody should have all their money in real estate, that's how everybody thought in about 2007. Everybody I knew had money invested in real estate. Guys that were just regular Joes were, buying stuff on speculation because, well, real estate, at least they thought, could only go up. I mean, sometimes it went up faster than others, but it always just went up, right? Well, they learned in 2007 that it doesn't work that way, and real estate tipped over, and then it went down in 2008 and down in 2009, and then everybody was panicking and selling real estate right and left as fast as they could get rid of it. So now's the time really that you should be thinking about gold, and that really is the whole point of this video. Um, I've been invested in gold for many years, and I think it's a very worthwhile thing. And you may not want to put every cent you have in it, but it's something that will stabilize the rest of your investments.
In fact, the only reason that we've done so well, or at least been able to keep up without the price spiking, is there are now millions of individuals in developing nations around the globe digging for gold. I have friends that kind of chuckle at me when they see me out with my metal detector finding a few ounces here and there. There are millions of people in developing nations that are out doing what I'm doing, only I do it and make some extra money. They do it because they need to eat. So it's a big deal, the small scale mining thing. One of the things you need to be aware of is that the Federal Reserve has now started pumping money into the economy. In September, there was a kind of an emergency that happened, and banks started not trusting other banks. And so the banks wouldn't loan to other banks, and the interest rate that people required to loan money to each other went from, 1% to 2 and 3 and 5, and eventually, rather quickly, it hit 10%. And this was alarming to the Federal Reserve in the United States and to banks around the world, because it's exactly this kind of thing that tipped off the economy and eventually sent it spiraling downward in 2007 and 8. So 11, 12 years ago, this is what happened. Well, it doesn't start with a giant explosion. All that stuff starts with little cracks, and the little cracks spread and get bigger, and the cracks get bigger, and then they open up into trenches, and then pretty soon stuff starts getting swallowed in. Well, we're just at the point where the Federal Reserve has seen a few little cracks opening up, and they've been buying $60 billion a month worth of treasuries. That's basically government debt. So it's one arm of the government telling another arm of the government, hey, here's $60 billion. Give you another 60 next month. That's kind of crazy, isn't it? Well, it's what we're going to see. And it's what we saw in 2007, 2008, is the Fed and the Treasury had to just pump huge amounts of money into the system in order to keep banks afloat. We had a few banks like Lehman Brothers, or banks, financial institutions like Lehman Brothers and Bear Stearns, banks that were solid as a rock and everybody thought they were in great shape. Didn't take long and they went out. We had situations where literally we almost crashed into a full-scale depression during that 2007 time period. Nobody trusted anybody. And there was good reason. All these banks were staying afloat by bad debt that they had accumulated by issuing mortgages that they never should have issued. And so there was all this huge amounts of bad debt, and we now have the same debt problem. Some of that debt in real estate was taken care of and ironed out. We now have a huge debt problem in student loans and in other places in the economy where we've just bubbled up giant amounts of debt. And what has to happen is eventually it comes home to roost. Eventually the bubbles pop. And when things pop, it gets bad, and it gets bad fast. I don't think that that's going to happen in the immediate future. I really don't think that we're looking at a crash in 2020. But, you know, it ain't going to continue like this forever. And the train's going to leave the station eventually. Now's the time to buy some gold. Or find some for yourself if that's what you want to do. That's what I'm doing. I'm digging my own.
And basically, this channel is all about teaching you how to find your own gold. So check out the videos that I've made, because I've made quite a few of them about how to find gold by different methods, about geology and that sort of thing. That's basically what the core of this YouTube channel is all about. And once you've found that gold, if you don't need to turn it in to get cash for it, you can save it as a store of wealth against future economic problems. And that's a lot of what I do. I keep mine in a safety deposit box, in case of the day when the economy turns really bad. Now, let's get back to talking about the outlook for gold in 2020.
And as bad as the situation is here in the United States, it's way worse overseas. Especially Europe and Japan. They've got just giant debt things where their central banks have just been pumping money into the economies for years and years to try and prop them up. It's a giant debt bubble, and eventually it's going to pop. And you know, when it pops overseas bad enough, the central bank here in the U.S. is not going to be able to bail out the entire planet. The U.S. Fed was able to bail out the U.S. in the 2007-2008 recession. Will we be able to bail out the entire world when the whole world collapses? That'll be tough. So it's a sensible thing. Even sensible, responsible financial advisors, and hey, like I say, I'm not a financial advisor. This is not financial advice. I'm just telling you my opinions. But sensible financial advisors, people who have qualifications, are suggesting to their clients that they invest in some gold. How much gold do you need? How much gold should you find? How much gold should you buy? That's a question for you to answer for yourself. It's a hard one. It's not an easy question. So you can ignore this old man's warnings about the economy and the debt bubble and that, hey, you ought to have some gold. You can just say, this old fart, he don't know what he's talking about. But I think if you do that, someday you're going to say to yourself, dang, I wish I'd listened to that crazy old man. Now, I've written a book about finding gold. And if you can find it, it's a whole lot cheaper to find it than to buy it. And it's a lot of fun. I enjoy myself going out and finding it. Like I say, we wrote a whole book about it. It's a long book that tells you everything you need to know about finding gold. It's called Fistful of Gold because that's what I want you to do, is go out and find some fistful of gold. Now, I'm going to tell you a little bit more about my book.
Okay, so I wanted to tell you a little bit more about my book. I wanted to be able to share the knowledge that I've gained about finding gold and how to be successful. And so I spent years literally writing this book, Fistful of Gold. It's more than 350 pages long, which is why I say it's an encyclopedia of everything you need to know about finding your own gold. I've sold more than 8,000 copies, and I've got a lot of really great feedback on it. It just is the most complete book on the market. It has information about finding gold that literally is not available in any other book that you're going to find for prospectors, because I took technical stuff from geologists and other mineral scientists, and I've translated that into language that the average guy can understand. You don't need a PhD to go out and find gold, but the information that scientists have learned over recent decades can be of a lot of help to people. So it's in this book. If you're interested about finding gold, panning, sluicing, nugget detecting, dry washing, the geology of gold deposits and how they form, it's all in here. And like I say, it's more than 350 pages long. So if you'll just go to the description underneath this video, you can take a look. I've got a link in there to take you to Amazon, to the site where the book is sold. And I think you'll really enjoy it. Take a look at
all the people who've commented on this and have really liked the book. It has a very, very high rating for a book. And also, I have a website, my own free website that you can take a look at. I've got all kinds of information on here about doing research and how to find gold, a lot of good information, stuff that basically couldn't fit into my book. And so I put it on this website, and I have a link also for that in the video description. So take a look in the description, and you can click on the link, and it'll take you to my website. And finally, if you like this presentation, I've got a lot more coming out. Here's a 3.5 ounces of gold that I found a couple of years back in one area. I've got a lot more of these videos coming on gold, gemstones, hard rock, placer, a lot of metal detecting. There'll be lots of metal detecting stuff. So if you really enjoyed this, click the subscribe button and then tick the notification bell off, and YouTube will let you know when I publish new stuff. And hit the like button as well. And please comment on these videos because I'm interested in what you have to say, and I promise to answer any questions you have. So if you are wondering about anything or think maybe I didn't cover something thoroughly enough in a video, then let me know, and I'll be happy to try and help you out and give you whatever information you need. So thanks a lot, and hope you enjoyed this, and we'll see you again real soon.